Welcome to our market breakdown. Today, we are analyzing the macro landscape and counting down the top 3 stocks positioned for outsized growth in the current quarter, driven by accelerating AI adoption, cloud expansion, and semiconductor demand. Starting off at number 3, Broadcom trades at a valuation of $1.81 trillion, posting $34.8 billion in revenue, with 14.5% year growth and $9.3 billion net income, rising 16.3%. Broadcom's competitive edge stems from vertically integrated chip design, advanced packaging facilities, and a global supply network that keeps unit costs low while delivering industry-leading gross margins above 60%. This structure supports pricing power across data center and 5G segments. Key 2026 catalysts include the rollout of next-generation AI accelerator chips, expanding demand for high-speed networking gear in hyperscale data centers, and a growing 5G infrastructure pipeline that fuels order backlog. Analysts project double-digit revenue acceleration through 2027. Institutional filings show a net increase of 12% in long positions over the past quarter, reflecting confidence in sustained earnings momentum and cash flow generation. Large funds have added shares during recent pullbacks. No material acquisitions were announced in 2026, leaving the company focused on organic R&D investment and shareholder returns through buybacks and dividends. Capital allocation remains disciplined. Footage of Broadcom's latest AI accelerator silicon being tested in a liquid-cooled rack illustrates the physical scale of its data center push. Engineers monitor thermal performance in real time. Next at number 2, Amazon commands a valuation of $2.8 trillion, delivering $478.7 billion in revenue, with 15.1% year growth and $18.3 billion net income, up 12.5%. Amazon's structural advantage rests on a sprawling fulfillment network, proprietary robotics, and AWS massive scale that together drive operating margins above 30% in cloud services. This integration creates a feedback loop between retail volume and cloud capacity. Growth drivers for 2026 include expanding e-commerce market share in emerging regions, accelerating adoption of AWS AI and machine learning services, and new logistics automation that cuts delivery times. Revenue guidance points to mid-teens top-line expansion. 13F data reveals a 9% rise in institutional holdings, with major pension funds increasing exposure to AWS-centric growth narratives. A quarterly revenue chart highlights AWS contributing over 60% of operating income, underscoring the cloud segment's profit engine. Year cloud growth remains above 20%. Warehouse footage shows autonomous robots navigating aisles, illustrating the physical automation that underpins Amazon's same-day delivery promise. Sensors track inventory in real time. And topping our list at number 1, NVIDIA commands a valuation of $5.32 trillion, posting $26.9 billion revenue, with 43.2% year growth and $7.3 billion net income, surging 55.1%. NVIDIA's edge derives from a unified GPU architecture, CUDA software ecosystem, and a vertically integrated supply chain that secures advanced wafer capacity, delivering gross margins near 70%. This lock-in fuels pricing power across AI training and inference workloads. 2026 catalysts feature the H100 Hopper rollout, liquid cooling solutions for dense AI clusters, and expanding enterprise software suites that accelerate model deployment. Demand from generative AI startups drives order backlog above $30 billion. Institutional ownership rose 11% last quarter, with sovereign wealth funds and tech-focused ETFs adding shares amid strong earnings revisions. Short interest remains at historic lows. A revenue growth chart shows data center segment surpassing gaming for the first time, reflecting the AI compute shift. Quarterly data center revenue grew 60% year. Close-up of an H100 GPU mounted in a liquid-cooled chassis demonstrates the thermal engineering that enables sustained petaflop performance. Engineers monitor coolant flow in real time. In summary, Broadcom's semiconductor momentum, Amazon's cloud retail flywheel, and NVIDIA's AI compute dominance each present compelling growth trajectories for the remainder of 2026. Investors should weigh valuation against catalyst timelines. This content is for informational purposes only and does not constitute investment advice.